Do you know that your bond investments can actually decline in value? Most people do not know this because their financial advisors have not explained it to them. However, this applies to even the safest of bonds, including US government bonds. The reason is that there is an inverse relationship, or an opposite relationship, between bond yields and bond values. As bond yields rise, bond values fall. Historically, during periods of war, US government bond yields have fallen and government bond values have increased. However, since the war in Iran began 3.5 weeks ago, the opposite has occurred. US government bond yields have risen and US government bond values have declined. This is because of the inflationary pressures associated with the war in Iran. In today's video, I will show you how US government bond yields have risen, I will show you how US government bond values have fallen, and then I will explain the 3 implications for your portfolio. Immediately before the war in Iran began 3.5 weeks ago, the yield on the US 10-year government bond was 3.96%. Today that yield is 4.39%. This is an increase of 45 basis points, or 0.45%, over just 3.5 weeks. This is a huge increase over a relatively short amount of time. The yield increase for other US government bonds ranging between 1 year and 30 years is comparable. Keep in mind that as bond yields rise, bond values fall. Also be aware that the longer the remaining time of the bond time to maturity, or investment horizon, the more the bond will lose value as interest rates rise. To demonstrate this, let's start off by taking a look at the bond fund with the ticker IEF. This is a relatively commonly held bond fund that owns US government bonds with remaining time horizons of 7 to 10 years. Before the war in Iran began 3.5 weeks ago, the bond fund was trading at $97.99. Today that fund trades at $94.83. This is a loss of 3.2% for the bond fund over just the past 3.5 weeks alone. Now let's take a look at the bond fund TLT. TLT is also relatively commonly held, and TLT owns US government bonds with time to maturity of at least 20 years. Before the war in Iran began, 3.5 weeks ago, the fund was worth $90.82. The bond fund today is worth $85.79. This is a loss of 5.5% for a long-term government bond fund over just the past 3.5 weeks alone. What are the 3 problems for your portfolio with lower bond values? Well, the first is obvious, that your portfolio is worth less. It is not a good feeling knowing that your portfolio has lost value from an asset class that you thought was safe. Secondly, you do not benefit from higher bond yields. You would either have to sell your existing bond holdings today at a loss, or alternatively wait for your bonds to mature in the future in order to receive capital to reinvest at bond yields which are higher today than they were just 3.5 weeks ago. Thirdly, and a lot of people do not know this, you also lose by having to pay bond fund fees. In addition to paying your financial advisor an annual fee, your advisor then turns around and on your behalf invests your capital in bond fund fees. Bond fund fees are expensive and have an average annual fee equal to 0.4%. That's right, in addition to paying your financial advisor an annual fee, for the privilege of your advisor placing your capital into passive bond funds, meaning passive for your advisor because your advisor doesn't have to be involved, your capital is subject to an additional fee equal to 0.4% a year. As you can see, the impact of rising bond yields and falling bond prices can actually be very detrimental to your portfolio. Let me wrap up today's video by asking you a question. What questions do you have about bond investing? Let me know in the comment section if you have any outstanding questions, or if you were aware that bonds lose value as interest rates rise, and whether your portfolio has been subject to losses over the past 3.5 weeks. In addition, if you would like to know solutions to this problem, let me know in the comment section, and if enough people post, then I can make a video in the near future articulating the solutions to this problem. Thanks for watching today.